You're tuned in to Agriculture Today, and we start our Friday show with K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, kicking off our show today, looking at the global grain market.
Yeah, we've been involved with a series of Kansas grain sorghum meetings here this week, or they call them grain sorghum connections, and one meeting in Salina, another in Hayes, and then one in Garden City. And as part of that, along with talking about sorghum, we talk about all the markets and give it a large overview. So this. At least as I've had a chance to talk with these folks, here's kind of a perspective that I have right now in the markets. I think without question, the market is in no way a seller's market. It's a pure buyer's market right now. With and pure is too hard of a word, but they view feed grain and oilseed supplies as fully adequate. We're not worried about to date anyway. We have not been worried about waiting till tomorrow to buy grains because we're pretty sure that most of those stockpiles will still be there in quantity tomorrow if we don't buy them today. So there's certainly the getting at the definition of a market where the buyers are not worried, so they take their time, look for bargains, etc. And that does describe the feed grain and oilseed markets, especially. It describes the wheat markets, although there are continued underlying issues in the wheat market that sure seem to be pointing towards times of likely volatility ahead, but aren't here right now. So still really very, very historically tight world wheat supplies, but weak U.S. exports still. And fair question, why does that continue to happen? Well, part of it has to do with the high U.S. dollar, high price of the dollar, and the relatively cheaper in relative terms currencies of these other export competitors that we're dealing with, and so you've got that hurts us. But there's a bigger issue, and our friend Guy Allen has talked about this quite a bit, and it sure seems to be holding true in that when other countries have when they produce exportable supplies, they're not really set up to store them. They either because of facilities or transportation or whatever, and a lot of times it's just finance. They don't have the same agricultural credit or lines of credit for agribusiness or agriculture to actually hold grain and store it. And yes, sometimes that involves interest costs at times, but so because of that, the USDA, one of the things that we have that just kind of brings about consternation is that we can hold grain because we're set up to do it, and we have good transportation systems, et cetera. Whereas most everybody else doesn't, and because of that, when these other crops are produced, they go to market, and the U.S. supplies tend to be held back. That kind of puts us in a last resort mode in the wheat market anyway, especially with the number of other competitors. Not quite so bad in the oilseed and feed grain market, just because there aren't that many other competitors out there. But in the wheat market, it really does come home to roost for us. So anyway, I think we've talked about how in these markets as we've entered into December now, that we're as we look at the historic seasonal price trends in Kansas anyway, and what tends to happen with prices, we tend in circumstances like this to go sideways to slightly higher off into spring. And spring for some of these crops, you're getting all the way into April, May, June, i.e., when we move out of late winter, early spring, and head off into field work time. So that's especially the case in the feed grains. We could end up with something else happening because of the trade discussions that are happening, of geopolitical issues, crop problems that may suddenly emerge that aren't there in large degree down South America. But absent anything like that happening, there aren't a lot of factors that the market and market traders are paying a lot of attention to that would give us higher prices. So I wouldn't say we're stuck, but we are in a situation where the narrative understanding of the market, the consensus of the market is that, hey, there's adequate grain around. And unless something surprising happens, we're not inclined to get worried about having to bid prices up. So it's kind of where we're at the moment. Because of that, when we do get if we were to get a surprise of 60 cents, a dollar and a half, we'd probably have a lot of very willing buyers just because it's of the surprise of it all. That's more the case for anybody that has cash flow needs now through about February, March, than it would be out into spring when probably have more volatility, more uncertainty, and then we'll see where things go. I would add in we've had a discussion in these same meetings about what can we anticipate of U.S. and world crop production plans heading off into now again December of 24, but also into the calendar year of 25. And in general, I think it's fair to say that for soybeans, that the U.S. and South American plantings are likely to be higher than in 25 than they were in 24. I know that at least the South American projections for the coming year are for still higher record prices, higher record production, and we'll see where prices go from there. And that has to do with just the availability of land, lower cost of production for sure, and for soybeans in most cases, and soybeans and other oilseed crops than for the feed grains. So because of that, you've got I guess when prices are all pretty much uniformly low, then we look at cost production more, and cost production seems to be favoring right now the oil seeds over the corn. And frankly, when you look at here in Kansas, the soybean to corn ratios at a place like Garden City here, you got a new crop soybean to corn ratio of basically 2.1. There, that's favoring planting corn. But if you go outside of that to Salina, to Topeka, to Hutchinson, and especially Columbus, you're 2.35, 2.45, something like that, favoring soybeans. So most of the state, except those areas that are dedicated to supplying feedlots and need corn, and that'd be again Northwest, West Central, Southwest Kansas. But the rest of the state, even new crop bids here locally, are favoring soybeans over corn. So that's just the reality of it. And I guess I would say also that if that's the case, then for soybeans, then the other side of that is that, well, where are those acres going to come from? Well, they'll tend to compete pretty hard with feed grains, particularly corn and sorghum, depending on where we're at. So U.S. South American acres likely to move sideways to lower. And there is an exception now here with all the trade discussions we've been having, both in the U.S. and abroad. China apparently has approached Brazil at a recent BRICS meeting that they'd had. That's a group of countries outside the U.S. that are seeking to establish their own currency and do all sorts of stuff. And, have more economic cooperation. But anyway, the point being there, they approached them about increasing their grain sorghum acres down in Brazil, with the idea that then China could have at least a competitive alternative to U.S. grain sorghum supplies in the world market. So we'll see what that happens. I look at that and I think, well, it's a kind of a systems answer, because yes, if Brazil were to increase their sorghum acres, where are they going to get that? Well, they're probably not going to take it from soybeans. So does that then come back and decrease their corn production? Does that tighten up the world market? So you've got kind of a circular effect there going on. So there's I think in the world grain markets, they're just like everywhere else. There's no free lunch. So if that does happen, and again, that'd be a response to some of the signaling going on right now with regard to what will happen with foreign trade once the new administration comes in. So we'll see on that. So anyway, you got all that going on, and so we'll see. Acres may be lower in the U.S. With regard to feed grains in general, but some of these international things in anticipation of trade trade contentions may switch some of that around. And finally, for wheat, um, uncertainty still prevails in the Black Sea region, the EU, Australia, other major areas, very weather dependent on the one hand, and trade challenge dependent on the other. So I really don't know what to say with that. I think if anything, we're as concerned about El Nino, La Nina, the impact on Europe, on Australia, and in terms of crop size in the wheat market as we are anything else. I just would say, gracious, that the uh, wheat market just keeps chugging along in a very myopic view of the markets having what's available right now in front of them that sets up their, hey, we got adequate supply type attitude when gosh, that's a tenuous situation with regard to what's happening in the world. So, but uh, but until something actually occurs that 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 would upset that balance of or that opinion of the market, we're probably staying with low prices until something changes.
And taking a closer local look at the grain market, what are we seeing for futures?
Well, well, here in the U.S., uh, yesterday was interesting that you know what, I guess after prices have been lower as they have been, you get any movement to the high side at all, even just a few cents, you're pretty excited about it if you're a seller. But anyway, Dees corn, which is in its delivery period now, closed up 4.5 cents to 426 and a half. That'd be on Thursday, December the 5th. And actually, the contract that we're setting prices off of, March 25 corn, 435, and then Dees 434, D's 25. So again, nothing to write home about in terms of pricing options. I'm sure most U.S. farmers are, they may not get that excited unless they really become pessimistic price wise at prices at 434 D's 25 futures. They're probably looking at something much higher, closer to five and plus. But it is as it is. And I would say also for soybeans, July, um, pardon me, January soybeans closed at 993, actually up 10 cents. November 25, 1007, up 6.25. So you've got some factors leading positively there. Wheat had a decent day. March 25 closed at 552 and a half, more really kind of markedly higher than it had been here of late, up 10 cents. And July 25 harvest 567, up 9.75. So you got that going on. I would say, we try to watch the ethanol markets and what they're paying for corn anyway, and grain sorghum when it does occur. But the Kansas corn bid up to basically $4.50, and your the next highest bid in the U.S. was in Illinois at 435. Over in Nebraska, 418, 430 in Ohio. So interesting to see that again in our part of the country in Kansas, we have still pretty relatively strong ethanol plant bids. And why are we so healthy here? Well, we do have some locational advantages relative to East Coast market, West Coast markets. We have strong usage of distillers grains with the feedlot industry, and uh, probably just this is probably just beating our chest, but we have well managed plants, no doubt. So, anyways, that's part of that. I would say in the cash markets that for all we're talking about in terms of movements, we still see in corn that uh, Southwest Kansas, $4.70, 35 over basis, still the leader in the state, although we have been at 45 and 50 over here recently. So yeah, it's the highest price, but the basis isn't quite as strong as it had been. And Colby, 434, 1 cent under. At the next highest bids, Columbus out in Southeast at 425.10 over. Salina, 415, Topeka, $4, 430 in Hutchinson. Sorghum, again, that's what we're kind of watching closely. The highest bids, Hutchinson, 420 at 15 under, 410 in Garden City, actually at 25 under. In Garden City, they're doing grain sorghum. That's Is that being fed? Is that being exported? But where's that going? Probably some of that being fed. So that's an interesting development. 395 in Colby, Salina, 385 at Columbus, 392 Topeka. So again, about 390 to $4. A lot of places for sorghum. For beans, there is we've got uh, the Colby area about 889, 890 for a cash price of dollar five under. But then even Garden City at 909 top price, 8,500. That's showing some strength. Uh, the highest price again in Kansas for sorghum. I mean for soybeans as in the southeast area. Columbus has a representative price in that part of the country, 957. And the next highest price, 948 in Hutchinson, 943 Topeka, 933 in Salina. So, just is as it is. And then for wheat, we do have in the western, there are three places in Kansas where the top bid for wheat is above $5. Hutchinson 532, 522 in Salina, 512 Topeka, and three places where it's not above $5, 496 in Columbus, 483 Garden City, 476 in Colby. And that's probably related to transportation issues. How quickly can we put something on probably not trucks, probably rail, and get it down to markets where it needs to go, unless trucks if it's going to a miller in central part of the state. But anyway, you've got transportation differentials and just the issues of the market all in play there.
Dan, any highlights when it comes to the exports that you'd like to share with our listeners?
Yeah, things are just kind of hopping around. Probably the big thing to note, again, we're doing grain sorghum meetings, so it really stands out. The optimal timing, I guess, for the week ending November 28th, the USDA showed that for grain sorghum we had about over 6 million bushel week of exports. There have been some weeks of 12, et cetera, when they really come to town. But you got over 6 million bushels of exports for the week ending November 28th. And then we need a pace about 4.8 meet the USDA's projection. So we're actually that week was ahead of pace. So we're getting into the time frame with this recent jump up when grain sorghum starts to really move faster in terms of exports. And this year, with the memory of what happened in the last U.S.-China's trade struggle and grain sorghum taking the shot first, well, it makes sense that if countries are anticipating this coming, that the time to buy grain sorghum is probably now, before that new administration even gets into town. So anyway, I'd be really curious to see what happens with grain sorghum through the rest of December and through most of January, before any changes in trade policy can take effect. So that's interesting to watch. Not much on wheat. Now we've had 1 or 2 weeks of really sterling wheat exports. This is not one of them. A lot weaker this week than we had been. Overall, U.S. wheat exports 11.8 million bushels for the week ending November 28th, and 16.4 is the pace we need to meet the USDA's projections, but just a down week, things happening. But where the real excitement is off in the oilseed complex. So you've got, we in Kansas don't normally watch soybean oil very much, but so the USDA has projected 270,000 metric tons of U.S. soybean oil exports for this marketing year. We had this week we blew the top off with 39,000 metric tons in 1 week, and have basically they're about just under 20% of the way through that marketing year. The cash shipments, the physical shipments have already made up 62% of the USDA's projection, 270,000 metric tons. But what's shipped and bought ahead makes up about 416,000 metric tons plus. And again, we're projecting 270, so that's 150% of the USDA's projection. We're only sitting 10 weeks in. Soybean Meal also had a great week, 470,000 metric tons. You need about 317 to beat the USDA's projection. And we're bought ahead again, 19% of the way through market year, about 46% of the way there. And then for soybeans, soybeans also running pretty strong with about 89 million bushels, a little over 89 million bushels actually shipped. With That puts us at about 40. Adding that on, we're about 44% of the way to the USDA's projection. And so we're shipped 89. We need to pace about 26 to meet the USDA's projection. Of course, we have a shortened window, but so we're sitting at 25% of the way through the marketing year. We have shipments and sales make up about 72% of all that. So with all that happening, you wonder, how come soybean prices in Kansas aren't that good? Well, whatever's happening on the usage side hasn't translated yet to that. But if the pace for soybean oil, soybean meal keep up, you would wonder about that bringing demand strength to the soybean cash markets around the U.S. and eventually showing up with some real positives price wise.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.